This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, January 27th, 2015. Euro dollar. So we're finally seeing a bit of a bounce in the euro, a long overdue bounce with technical studies having been so oversold. The market trading back above 113 into Tuesday after breaking to another fresh 11-year low early Monday at 1098. From here, there's risk for additional corrective action towards some previous support now turn resistance in the 1460 area, and then the market should start to look to find a lower top ahead of a bearish continuation. Ultimately, while the market holds below the 50-day moving average, the trend remains intensely focused on the downside. Sterling dollar. So cable has also bounced out of recent 2015 lows at 49.51 after the market broke to multi-month lows down to that level and towards the 2013 base at 48.13. But it seems that a correction is underway here as well, and the risk is for additional gains up towards the recent range highs at 52.70. But only a break and close back above 152.70 would compromise the current bearish outlook. Dollar yen. Dollar yen continues to chop around between 115.55 and 121.85 as the market consolidates the latest round of intense gains in recent months. The 121.85 area represents the recent 7-year high from December, and ultimately this consolidation is favored to break to the upside in favor of a bullish continuation towards the 125 area. Only back below 115.55 would delay the immediate bullish outlook. Euro Swiss. Euro Swiss continues with its recovery following the following the S&B shock, with the market now breaking above recent range highs at 102.50 after consolidating between 97.10 and 102.50. The break above 102.50 now projects additional upside and the measured move objective towards the 107 area over the coming sessions. Aussie dollar. Aussie dollar is in the process of a minor correction after recently breaking down below key psychological barriers at 80, but the correction is just that. It's seen as only a minor correction, with a lower top eventually sought out somewhere below 82.95 ahead of the next downside extension towards a measured move extension or a measured move objective at 77. Dollar CAD. Dollar CAD has recently raced up to fresh multi-year highs towards the 125 barrier ahead of a latest minor pullback into Tuesday trade. But with daily studies and weekly studies and monthly studies all overextended and daily studies very well overextended, there is risk for a short-term pullback to allow for these technical studies to unwind. Look for the 10-day moving average, which currently comes in around the 122 area, to now act as a formidable support. But again, there is room for deeper setbacks to allow for this technical studies to unwind. Kiwi dollar. Kiwi is in the process of a minor correction to the upside after recently breaking down below the previous key lows from 2014 at 76.09. Ultimately, this sets the stage for a test of 72 over the coming sessions, but in the interim, any rally should be very well capped into that previous support now turn resistance at 76.09. S&P 500. The SPX 500, it looks like it's in the process of carving a major top, but the market will need to break down below recent lows that we've seen on Monday at 2030 and then towards the key lows at 1968 from the 16th of December to confirm this toppish structure and accelerate declines down towards the October lows at 1820. But a break back above 1970 would negate this possibility and expose a retest of the recent record highs just shy of 2100. Gold. Gold is in the process of consolidating recent gains after breaking out above key resistance at 1256 several days back. This sets the stage for a test of more significant resistance in the 1345 area, and ultimately only back below recent lows at 1217 would compromise this newly adopted bullish outlook. That's all for today.